Hello, ladies and gentlemen. Greg Michalowski from ForexLive.com. Today's date is February 2nd, 2024. We just had the U.S. jobs report, much stronger than expected, the highest level since January 2023. Coincidentally, it's January 2024 report. Maybe there's something in the seasonals, but everything was strong in the report. The unemployment rate was lower than expected. The non-farm payroll was much higher than expected. We saw payroll numbers be higher than expected as well. Nothing negative in the report. There is a talk that maybe the seasonals came into play, and that's the only hope. But what we are seeing in the market is that the S&P is now up around 10 points. The Dow Industrial Average is in negative territory at minus 86 points, and the NASDAQ index is still up by 87 points thanks to Meta earnings after the close yesterday, and also the Amazon earnings as well. Apple was suffering, however, a little bit from their issues, but still, so a mixed stock market. We are seeing yields in the U.S. move higher, with a 2-year yield up 18.4 basis points at 4.378%. The 10-year yield is pushing against the 4% level at 3.993%. That's up 13.0 basis points. So let's take a look at some of the technicals that are driving the major currency pairs. We'll start with the euro versus U.S. dollar, look at the dollar versus yen, and sterling versus U.S. dollar next. So let's get going. Let's look at the 4-hour chart of the euro versus U.S. dollar, and we're seeing a sharp move to the downside. When the euro moves lower, the dollar moves higher. Or the euro versus U.S. dollar moves lower, the dollar moves higher. And we've entered into this swing area here, where we had a number of different swing lows and swing highs, which formed this area through here and here and here and here. We broke to the upside here, returned to that area in trading last week, here, here, and here, but found support buyers within that area on each of the times. And this week, the market did move below that area, both here and here, but each of the time the market tested the 50% retracement of the move up from the October low to the December high right through here. At that level came in at 1.07936. We did have one break below that 50% retracement level on Wednesday or Thursday, and the price, though, did find support buyers just ahead of the 100-day moving average. That 100-day moving average currently comes in at 1.0776, and that's also going to be a key target that would need to get to and through if the sellers are to take more control. So looking at this area right through here, still remains as support targets on the downside for the euro versus U.S. dollar, but the sellers are certainly more in control. So what would hurt the bearish bias for the euro versus U.S. dollar now? Well, the 200-day moving average, although the price has been moving above and below that 200-day moving average over the last 2 trading weeks, still getting back below that level at 1.0838, gives traders something to lean against on any sort of corrective move to the upside in trading here today. A closer resistance level might be at that 1.0824 level. That's a high of this swing area. That level did a pretty good job of trying to hold support against it in trading last week in each of these dips to the downside, but it's been, again, moving above and below it in trading this week. Again, this was formed way back here during this period through here, but watch that level as well. But sellers are more in control. Stay below 200-day moving average is more bearish than the euro versus U.S. dollar. Let's take a look at the dollar versus yen next, and this on the hourly chart. We're seeing a sharp move to the upside in that currency pair, and in the process, we're testing this trend line, connecting highs, high here with a high here, and that level is being tested at 147.84. We moved just a little bit above that, currently trading just above it as I type. Getting above that level and staying above that level will have traders look toward Monday's highs. The high price actually for the week was the first hour of trading on Monday at 148.32. So there's room to roam to get up to that level, and then we start to look toward the high prices for the month of January. The highest price came in around the 148.78 level on the top side. So break above this level with more momentum, and we start to tick off the other high prices in this consolidation range through here. In trading this week, the price low that we saw in yesterday came down to a swing area here, defined by different swing lows and highs through this area through here before breaking to the upside. So the ability to sort of find support here. I know we moved a little bit below that level, but then reestablish support against the high of that swing area here before moving to the upside. Gives the buyers a more control. The dip to the downside in trading this week failed to get to the 38.2% retracement of this move to the upside. As most people know, I like to see the price extend down to and through the 38.2% retracement on any sort of corrective move in the market. Clearly fell short of that 38.2% retracement this week. So the buyers are more in control in the data today, helped to confirm that. Finally, let's take a look at the sterling versus US dollar. And what can you say? The data keeps on pushing this pair within the trading range between 1.26 and 1.28. That's been going on since way back here, back in December 13th, December 14th. The price yesterday moved back above the 100 and 200 hour moving averages, which is basically in the middle of that range, around the 127 level, and trading here today with the jobs report coming out strong and the dollar moving higher. The price has moved back below the 200 and 100 hour moving average and looks toward the 50% retracement of the move up from the December low to the December high right through here. That comes in 126.62. If we move below that level, we look toward this level right through here, which was a low price both here and here. This week we fell below it on both Tuesday and Thursday. But getting through that level would open the door for a 61.8% retracement, which was the low for this week's trading. That's again of the move up from the December low to the December high. So the sterling versus US dollar remains in this up and down 200 pip trading range that has been going on now for over a month and a half. So there you have it. A look at some of the major currency pairs from a technical perspective. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.